Assalamu alaikum wa rahmatullahi wa barakatuhu. My dear students, today we are going to see chapter number 10, Dividend and Interest. In this chapter, we are supposed to study dividend, features of dividend, legal provisions on dividend, unpaid and unclaimed dividend, interim dividend, interest, its meaning and features. Coming to the meaning for the word dividend, see, we all have studied what is dividend in 11th standard. As we all know, dividend is nothing but return on shares, right? Today we are going to see this in detail. See, the term dividend is derived from the Latin word dividendum, which means that which is to be divided. See, when a company earns profit, the company first of all tries to clear all the debts, liabilities, payment of interest, etc. to the other stakeholders apart from shareholders, right? Once every payment is cleared, when all the payments are cleared, the company remaining profit gives it to the shareholder in the form of dividend, right? So then that amount is divided. This is what it's written here, that which is to be divided among the shareholders of the company. Okay? Dividend is a share in distributable profits of the company to which the shareholder is entitled when it is formally declared by the company. The company declares the dividend at the annual general meeting, right? So here you're supposed to remember the term dividend is derived from the Latin word dividendum, which means that which is to be divided. Coming to the definition, the Institute of Chartered Accountants of India has defined dividend as a distribution to shareholders, out of profits or reserves available for this purpose. Now see here, when company tries to keep some amount in reserve and surplus, we all know those reserves and surplus belongs to equity shareholders, right? So yes, we can say that in this definition it's clearly said a distribution to shareholders which is to be divided, the profit which is to be divided among shareholders out of profits, out of current year profits or reserves available for this purpose. Now, what are the features of dividend? See, it's very interesting here. There are 14 features given. You have to pay attention to all. The very first one is, it is portion of profits paid to its shareholders, right? It's a part of profit. It's a portion of profits which is paid to its shareholders. Now, second feature is it's payable only out of profits of the company. Okay. Third is dividend is an unconditional payment made by the company. It's non-questionable. You can't ask a company regarding anything about the payment of dividend. Why? Because it's unconditional. Company has to pay dividend. The very fourth one can be paid only to the shareholders, only and only to the shareholders, that is equity shareholders and preference shareholders, right? The return on investment on shares are known as dividend. We have already seen if you try to invest in other securities of the company apart from equity shares or preference shares, the return are termed as interest. We have already seen. So yes, company can pay dividend only to the shareholders, that is equity shares and preference shares. See, dividend cannot be declared out of capital. It's compulsory that the company has to declare dividend out of profits or reserves, but company cannot declare dividend out of capital. Now, dividend can be declared only on recommendation of the board of directors. Now, coming back to 11th standard, board of directors, a very important role player in a company, right? Board of directors, the persons who make all the decisions, rules and regulations, policies, the person who actually manages the companies, right? Board of directors. So yes, dividend can be declared only on recommendation of board of directors. Dividend as recommended by board of directors is approved and declared by a resolution passed at the annual general meeting by the shareholders. Okay, the decision making part of dividend is in the hands of board of directors, while its approval is in the hands of shareholders. Dividend for any previous year cannot be declared. I repeat, dividend of any previous year cannot be declared once the year's annual account has been approved in the annual general meeting. It means that once the books of accounts are closed for that particular year, you cannot declare that particular year's dividend in the coming year. Once the books are closed, everything is done. Now, coming to the 10th point, dividend once approved and declared by shareholders creates a debt. It cannot be revoked. That is, it cannot be cancelled. Once the approval and declaration regarding the dividend is done, okay, it cannot be cancelled. Now, it's a debt. It's a liability of the company to pay to the shareholders. Dividend includes interim dividend. Interim dividend we are going to study in detail, but as of now, you are only supposed to understand interim dividend is that dividend which is declared in one particular year between two annual general meetings. See, once a company gives dividend at the end of the year when closing the books. Apart from this dividend, when company within 6 months or within 4 months declares a dividend, that dividend is termed as interim dividend. Now, dividend must be paid in cash and not in kind. Compulsorily, company has to pay dividend in cash. Dividend is to be paid on paid up value of shares. You should, the moment I say paid up value of shares, that chart should pop up in your head, right? The face value of shares is 10. On application, you pay some amount, and then on allotment, you pay some amount, but then still there is pending call on shares. So now only company will pay you dividend only on the paid up value of shares. Now, dividend cannot be paid on calls paid in advance. If your company has not asked you to pay call on shares, but still you have done the complete payment of shares in advance, that is known as payment done in advance. So company is not liable to pay you dividend on the advance you paid in forms of calls. Is that clear? So here there are 14 features of dividend. Those features are really very easy. Now, coming to the legal provisions on dividend. Now we are going to see what are the legal provisions, legal rules and regulations regarding, source of dividend, then declaration of dividend, and then payment of dividend. Coming to the very first one, legal provisions for payment of dividend. Now see, company may declare and pay dividend for any financial year out of the following. Now, company can pay dividend only out of current profits. This year profits of the company of that year arrived at after providing for depreciation and transfer to reserves. See, we have already seen shareholders are the residual claimants in terms of returns on investment and at the time of winding up of the company. So yes, I can say after providing for depreciation, after clearing all their debts, after transferring it to the reserves, from that remaining amount company pays dividend for that particular year. Now, company can even pay dividend out of profits of the company of any previous financial year after providing for depreciation. Third is money provided by central or state government to pay dividend. At times, when government pays to the company to particularly pay it to the pay to the shareholders in the form of dividend, company may utilize that amount given by central or state government. Now, dividend can be paid out of capital profits on fulfilling these conditions. Now, what is capital profit? Capital profits are realized in cash. Let's say company is selling a building. Okay. Now, company bought that building. We already know there is always an increment in the value of money for land and building, right? When there is an increment, company bought that land and building for 1 lakh rupees, but now company is selling the same in 1,50,000. So yes, that 50,000 is the capital profit which company can utilize in payment of dividend. Secondly, articles of association of the company permits such distribution. There should be a clause regarding payment of dividend from capital profits only in the articles of association of the company. It remains as profits after revaluation of all the assets and liabilities. Once all the revaluation thing for the assets and liabilities are done, company can utilize capital profit. See, again, the speeches are repeated here. Dividend cannot be paid out of capital and dividend can be paid out of free reserves of the company. These are the two most important features of dividend. Coming to the legal provisions for declaration of dividend, the very first and most important thing is conducting meeting. So yes, board meeting should be conducted before declaring the dividend. Now see, in board meeting, when the board meeting is held, company is supposed, board meeting, board of directors are supposed to decide the rate of dividend and amount of dividend to be paid. In that particular meeting, date of annual general meeting is also decided. So conducting board meeting, the very first step is very important. Then second come shareholders approval. See, dividend is approved by shareholders by passing an ordinary resolution where at the annual general meeting. Now see here, the decided rate of dividend can be done lower, can be deducted by the shareholders, but they cannot increase the rate. Okay, shareholders can declare a lower rate of dividend than what is recommended by the board, but not higher than that. They cannot increase the rate of dividend. And once the dividend is declared and approved by shareholders, it cannot be revoked, it cannot be cancelled. We have already seen this in the features of dividend. Now coming to the third part is separate bank account. Yes, it's very important. The company must deposit the dividend amount in a separate bank account open in a scheduled bank called as dividend account within 5 days of its declaration. See, you have to pay attention. This dividend account should be opened by company in a scheduled bank within 5 days of its declaration. Now, coming to the fourth point is prohibition to pay dividend. In what circumstances and in what condition company cannot pay dividend to the shareholders? The very first one is a company which has failed to repay deposit or any interest on deposit cannot declare any dividend on its equity shares. If there is a liability on a company to pay interest on any other securities of the company apart from shares. If company is in default to pay the interest, company cannot pay dividend to its shareholders. And no dividend can be declared if company has defaulted on. Now see what are the conditions. If company is lacking in all such conditions, company cannot pay dividend. That is redemption of debentures or payment of interest. If there is a redemption in that particular year, redemption paying back to the debenture holders, or even interest is pending on that, then redemption of preference shares or payment of interest to any financial institution, etc. Now, any other liability, any XYZ liability of the company, if company has not paid, company cannot pay dividend to the shareholders. And lastly, legal provisions for payment of dividend. How company is supposed to pay dividend? See, we have already seen in the features, dividend must be paid in cash and not in kind. Paid by check or warrant or by any electronic mode to the shareholders. It's paid in cash, the very first thing, and can be paid by check or by warrant or by any other electronic mode. Now, the third most important part is joint holding of shares. If two or more persons have bought these shares, okay, that one particular share, there is a joint holding. Dividend warrant should be sent to the registered address of the first name joint shareholder as per the register of members. See, what is register of members? We have already seen a register where all the important details of the shareholders are written. You can say number of shares bought, name, address, telephone number, interest to be paid. All the important details are mentioned in that register of members. So, the very first name written in the register of members, the dividend warrant should be sent to that person. Okay. Coming to the fourth, time limit within which dividend is to be paid within 30 days from the date of its declaration. Now, once the dividend is declared, dividend should be paid within 30 days of its declaration. Now, dividend is payable only to the registered shareholders of the company. Very important, registered shareholders, those shareholders whose names appear in the register of members. Now, preference shares holders are entitled to the dividend before it is paid to the equity shareholders. We have always seen the word preference itself says preference shareholders are given preferential rights over equity shareholders. Now, see here, equity shareholders will get dividend from residual profits, those profits which are remaining after clearing all the liabilities, paying the interest. If equity shareholders are termed as residual claimants, it is clear that they will get dividend from residual profits. That is, after paying to preference shareholders and arrears of dividend on cumulative preference shares. We have already seen what is cumulative preference shares. Those preference shares whose dividend gets accumulated if not paid in that particular year. Seventh one, default. See, default in paying dividend in the given time results in punishment to every director of the company. See, we have already seen in the features, if the dividend is declared and approved in the annual general meeting, it turns into a liability of the company because it cannot be revoked. So yes, there would be punishment to every director of the company. Company will be liable to pay simple interest at the rate of 12% per annum during the period when the default continues. If company fails to comply with any of the requirement of this section, if company fails to fulfill any of the requirement of this section, the company and directors shall be liable to pay fine. Okay, so these are the legal provisions regarding dividend. Coming to the next topic is unpaid and unclaimed dividend. Now see here, unpaid and unclaimed dividend, what is this? Now, dividend declared by company not been paid, okay, dividend declared by company not been paid or claimed by a shareholder within 30 days of its declaration. See, we have already seen in the provision, company is supposed to compulsorily give dividend within 30 days after its declaration, right? So now, when company is failing to pay dividend within 30 days or shareholder did not claim the dividend within 30 days, it is said as unpaid and unclaimed dividend. I repeat, dividend declared by company and not been paid by it or claimed by a shareholder within 30 days of its declaration is termed as unpaid and unclaimed dividend. Now see, what rules govern unpaid or unclaimed dividend? See, total amount of dividend which remains unpaid or unclaimed should be transferred to unpaid dividend account open in a scheduled bank by the company. We have already seen company is supposed to open dividend account in a scheduled bank, right? Once all the declaration is done, payment is done, but then still there are few of the shareholders who haven't claimed the dividend, that amount from dividend account should be compulsorily transferred to unpaid dividend account, and that account should also be opened in a scheduled bank. The second rule is transfer should be done within 7 days of the end of 30 days within which payment was made. Once the 30 days are done, company is supposed to transfer that amount to unpaid dividend account within 7 days. Within 90 days of the transfer in the unpaid dividend account, the company is required to put on its website or any other website. Now, once after transferring it to the unpaid dividend account, within 90 days, if still there is an amount pending, company is supposed to put it on the website, company's website or any other website. What all details? A statement which shows names, last known addresses and unpaid amount payable to each shareholder. There would be a statement in which the name of the shareholder, the last known address and the amount which is to be paid should be mentioned on the website of the company or any other website. Now, the fourth one here is any claimant, any person who is claiming to the unpaid dividend account may apply to the company for the payment of money. Okay, if that particular shareholder is coming after 90 days and trying to claim the unpaid dividend, yes, he can apply for the same. Now, amount in the unpaid dividend account of a company which remains unpaid and unclaimed for a period of 7 years. Okay, 7 years shareholder is not claiming the dividend, that amount should be transferred by the company to Investors Education and Protection Fund, that is IEPF. See, coming from the starting, company is going to first of all transfer the dividend amount to the dividend account. Okay, if it's remain unpaid and unclaimed within that 30 days, it should be transferred to the unpaid dividend account within 7 days. Now, after 7 years, if it's still unpaid and unclaimed, it should be transferred by the company to Investors Education and Protection Fund. Now, the claimant of money, which will have to follow the procedures and submit necessary documents. If you're trying to claim for that dividend, you have to follow the procedures and submit the necessary documents to get the same. Now, coming to interim dividend. We have already seen a dividend which is declared between two annual general meeting is known as interim dividend. What is the meaning? See, dividend declared by the board of directors between two annual general meeting is termed as interim dividend. Okay, the most important part here is interim dividend is paid in the middle of accounting year. See, I have already told you dividend is declared at the end of the financial year in the annual general meeting, right? But when it is paid in the middle of the accounting year, it is termed as interim dividend. I repeat, dividend declared by the board of directors between two annual general meeting is called interim dividend. Interim dividend is paid in the middle of accounting year, that is, before the finalization of annual accounts for the year. Opinion of the company's auditor should be taken before declaring interim dividend. Now, features of interim dividend. See, the who has got the power to declare? Board of directors have got powers to declare interim dividend. Interim dividend is only a payment on account of the whole dividend for the year. Company should provide depreciation for the entire year and not proportionately. Okay, in that particular financial year, when company is planning to declare interim dividend, company should clear depreciation for the entire year. Okay, interim dividend cannot be paid out of any reserves. Pay attention to the fourth point. See, general annual dividend can be paid out of reserves, but interim dividend cannot be paid out of any reserves. Now, there should be a clause in the articles of association for the board of directors to declare interim dividend. And the sixth point, the board meeting has to pass a resolution for declaring the interim dividend. The amount to be given as interim dividend must be credited in a separate bank account in scheduled bank within 5 days of its declaration. Interim dividend should be paid within 30 days of its declaration, same like the annual dividend. Unpaid or unclaimed interim dividend should be transferred to unpaid dividend account within 7 days of the expiry of 30 days of its declaration. That is total 37 days. See, we have already seen these are the same terms and conditions which we already saw for dividend. Now, any amount remaining in unpaid or unclaimed in the unpaid dividend account for 7 years should be transferred to IEPF. We have already seen, right? Investors Education and Protection Fund. So these are the certain provisions, rules and regulation features of dividend. Coming to the last topic, interest. See here, we have already seen when a person invests in any of the securities of the company, apart from shares, the return on such securities are termed as interest. But now we are going to see it in detail. See, in financial terms, it is a payment for using money of another. Let's say if I'm giving you 1000 rupees as a loan. Okay, so now you're going to use my money. So when you're going to pay me back. Okay, when you're going to pay me, you're going to pay me 1200 rupees. 1000 is the principal amount and 200 rupee is the interest amount. That is the amount you're going to pay me for using my money. Okay, see, in financial terms, it is a payment made for using money of another. Borrower takes money from the lender. So, interest is the cost of returning money. You are paying me the cost. You are paying me 1000 rupees. You are paying me the cost for the same. That is that 200 rupees. The cost of returning money for the borrower. The income from lending money for the lender. For me, interest is an income as I'm lender. For the lender, interest is income. But for the borrower, interest is a cost of returning money. It's a liability which the borrower is supposed to pay. Okay, this is the meaning for the word interest. Coming to the features of interest. The very first one, the price paid for the productive service rendered by capital. You have taken this 1000 rupees to invest somewhere. That is your capital. So now you're going to use that capital for some productive service. So you're going to pay me the price for the same. Now see, it is directly related to the risk. Higher the risk, higher is the interest. Remember this, higher the risk, higher is the interest. Now, rate of interest is expressed as annual percentage of principal. You're going to pay me the interest on that principal amount, 1000, right? So the rate of interest is decided on the principal amount. The fourth one is rate of interest is determined by various factors like money supply, fiscal policy, volume of borrowings, rate of inflation, etc. These all factors play a very important role in deciding the rate of interest. Now, even if company makes no profit, interest should be paid. See, we have already seen it's a compulsory liability of a company to pay interest on debentures, right, bonds, or on the loans which company has taken. See, it is payable at a fixed and generally predetermined rate. The rate of interest is fixed and it's decided before issuing any of the security, or it's decided before taking the loan. Company has to pay interest if it has borrowed money from creditors like, see, debenture holders, depositors, bond holders, etc. These are the creditors to the company. Okay, so that's all for today, class. Thank you.